Okay, good morning and welcome to our webinar series on cloud accounting. Over the past few months, we've been engaging our audience on cloud-related issues as far as accounting is concerned, and we have mostly concentrated on Xero. So today we'll be discussing also again an aspect of Xero, which has to do with accounting behind Xero. So what we have found out is that most Xero users do not understand the accounting behind the beautiful features of Xero, and therefore find it challenging to maximize the use of the software. Now, if you do not understand the accounting behind Xero, you risk having wrong accounting data in your system. In this webinar, we will explain the accounting behind Xero so you can use Xero with confidence. And so with me today to do the discussion is Ellen. Ellen is the manager of the client accounting unit of SCG Chartered Accountants, and she has been our Xero expert over the past few months, and she's been very resourceful. So without spending much time, I would like to invite Ellen to introduce herself, and then we move from there. But before then, let me just state that your mics are muted to prevent feedbacks. And if you have any question in the course of the presentation or the session, kindly put them in the Q&A box below your screen, and we will attend to all questions at the end of the session. So Ellen, you are welcome. Kindly introduce yourself.
Thanks, Amos, for having me. If you are joining us for the first time, I'm Ellen Osa-Nimako. I've worked with SCG for 5 years as an outsourced accountant for SMEs and subsidiaries of multinational firms. So my role includes reviewing accounting or bookkeeping activities in Xero and ensuring accounting information is compliant with the IFRS for SMEs, and it's also relevant for decision making.
Okay, great one. So, so Ellen, today, what would you be taking us through?
Okay, so today I'll be taking you through the accounting entries behind the features you use in Xero and the transactions you enter. So in details, we'll be looking at the objective of financial statements. We'll look at the chart of accounts. We'll look at the accounting entries for some transactions. We will then proceed to look at the journals or the manual journals in Xero. I will take your questions and then provide answers. So you are welcome, and do stay with us.
All right, thank you, Ellen. So let's move straight into action and delve into our today's topic. So Ellen, when we say financial statements, what does it mean and what is the objective of financial statements?
Okay, so financial statement is made up of 5 elements: the statement of financial position, statement of comprehensive income, the statement of changes in equity, statement of cash flows, and the notes to the financial statement. So these 5 elements make up the financial statement. The objective is simple: to provide information about the financial performance, the financial position, and cash flows of the entity, information which is useful for decision making by a broad range of users. And often these users are not in a position to demand any report which is tailored to their particular needs. So that is simply the objective of the financial statement. We are going to now look at 2 elements of the financial statement, which are the financial position and then the financial performance. Now, looking at the financial position, it simply shows the relationship of the assets, liabilities, and then the equity as of a specific date. So your total assets minus the liabilities is equal to the equity, or your total assets is equal to your liability plus the equity. So this is what is commonly known as what the accounting equation. So we are going to delve a bit more into details concerning the elements of the financial position. So we are going to look at the first one, which is the assets. What then is an asset? So an asset is a resource controlled by the entity, and it's as a result of past events. And we expect that future economic benefits will flow from these resources into the entity. So such resources which are controlled by the entity are referred to as assets. What then is also a liability? It's simply a present obligation that you have, which is as a result of past events. And then often when you have to settle these liability, we expect that there would be an outflow of resources from the entity. So these kind of transactions are what we term as what liability. And then the final element of the financial position is the equity. So the equity is simply the residual interest in the assets of the entity after all the liabilities have been deducted. So it's the same as what the net assets, which is the total assets minus the total liabilities. We would continue to look at the second element of the financial statement.
Okay. So Ellen, having explained the relationship or what assets and liability and equities are, can we relate to when we say this in relation to financial performance? What do we mean by financial performance?
Okay. So the financial performance also shows the relationship between the income and then the expense of the entity during a reporting period. So what then is an income now? Income is simply increases in economic benefits during the reporting period. So often income is in the form of inflows or enhancement of assets or decreases of liabilities, and then they result in an increase in equity. So any other transactions which relates to contribution from owners other than what I have specified about isn't termed as income. So for expenses, we are looking at decreases in the economic benefits during the period. And expenses are also mostly in the form of outflows or depletion of assets in the form of depreciation or any incurrences of liabilities. And these kind of transactions result in a decrease in equity. So whereas the income will lead to an increase in equity, the expenses will lead to a decrease in equity. So for distribution to owners, such as dividends, these are not expenses. So these are the elements of the financial performance.
Oh, okay. So let me just take you to chart of accounts, because financial or softwares deal with chart of account just like any other setup. So what then is chart of account in relation to this and other issues?
Okay, so the chart of account is simply a list of accounts and is used to classify each transaction into either an asset, a liability, an equity, revenue, or expense. So the accounting software will always use the chart of accounts to present the accounting information of the business. So the accounting information of the business is the P&L, the balance sheet, the cash flow statement. Yeah. When it comes to preparing the financial statement, mostly the chart of account is mapped to a report code. And these report codes are also chart of accounts, but then they are designed specifically for financial reporting purposes. So anytime you have to classify a transaction as a liability, equity, assets, revenue, or expense, we refer that process as coding or as recognizing a transaction. So before you code any transaction, you need to make sure that it meets the definition of the assets, liabilities, equity. But then if they are repetitive transactions, you probably just do it once, and then subsequently when there are new transactions, you have to go through that same process of making sure that it meets the definition before you code it or classify it as such. So we would now look at the accounting entries for some transactions in Xero. And our focus for today, we'll be looking at the spend or receive money transactions. We'll be looking at bills and invoices. We'll be looking at quotations, purchase orders, and then we'll also look at the VAT or the levies accounting. Okay, so let's proceed. So for a spend or receive money transaction, these kind of transactions, they do not require the issue of an invoice or the receipt of a bill. So for instance, a transaction like a cash purchase, cash sales, the statutory payments, interest received, for these kind of transactions, you will not receive a bill, neither will you issue an invoice. So you use the spend money or the receive money feature in Xero for these kind of transactions. So if it's a spend money transaction, the cash book is going to be credited, and then whether the transaction is an asset or an expense is going to be debited. The opposite is for receive money. If it's a receive money transaction, the cash book is going to be debited. The revenue, liability, or the equity account is going to be credited, depending on the nature of the transaction. Okay, so how about an invoice or a bill? So for invoices, after you've raised the quotes, you normally convert it into an approved invoice. So once the invoice is approved, Xero will automatically debit the accounts receivable account, and then often the revenue account is going to be credited because it's a sale. So if it's a bill also, for that one, you normally raise a purchase order and then convert the purchase order to a bill.
So let me. So when you say invoice, in this sense, you are referring to invoices that we are raising to our customers.
Yes, customer invoices.
Those who have bought service or goods from us.
Exactly.
And then when you refer to bills, in this sense, is something or invoice we have received from our suppliers.
Exactly.
Okay.
So if you are going through the purchase process, normally you issue a purchase order.
Yes.
When the goods are submitted to you or when the service is rendered, you would convert that into an approved bill. So once the bill is approved, these are the entries that are going to be entered. The inventory or the expense account is going to be debited, and then the accounts payable account will be credited. So then how about purchase orders or quotations? Well, for the purchase orders or for quotations, there are no accounting entries involved in there. So they are inbuilt processes. So it helps you to go through the sales and then the purchase process so that you can gain control over your accounting information. And then at the end of the day, you are sure that the information that you are getting from your software is relevant for decision making. So there are no accounting entries when you raise a purchase order or a quotation in Xero. The last bit of the accounting entries has to do with the VAT and then the levies. The VAT and then the levies. So in line with our current VAT laws, anytime you render a service or sell goods, which are taxable supplies, you will charge VAT on it. So the same thing also applies to when you receive bills for taxable supplies, which have been rendered to you. So first and foremost, you need to set up the VAT rate in Xero. It's done either during the setup process or after setup process. So when you set it up, you can easily select the VAT rate when you are creating an invoice. So on this webinar, we are not covering the setup of the VAT rates yet. So for the accounting entries for an invoice, for example, if you have an invoice amount of 118.13, the receivable account is going to be debited with the full invoice amount, which is the 118.13. And then the revenue account is going to be credited with the amount exclusive of the VAT and then the levies, which will be 100. And then you have the VAT account credited with 18.13, which is the VAT and then the levies amounts. So this will be the accounting entries for an invoice which have been issued to a customer. Well, how about if it's a bill? So the same example, if you have a bill of 118.13, you would have the purchase or the inventory account debited with the amount exclusive of the VAT and levies, in this case 100. And then the accounts payable account will be credited with the full invoice amount, which will be 118.13. And then the VAT account is going to be credited with the VAT and then the levies amount. So in this case, we have the 18.13 is going to be debited with 18.13. So since the full 18.13 is going into the VAT account as input VAT, remember the 18.13 contains both the levies and then the VAT amount. So you need to be familiar with the VAT laws. The VAT laws does not allow input VAT on levies. So make sure you pass journals to move that amount out of the VAT account into the expense account. So it's very important that you are familiar with the VAT laws and then you make the adjustments accordingly. The final section has to do with journals or manual journal. So a journal is simply a record of transaction in order by date. In Xero, the journal is known as manual journals. It's known as manual journals. So in the computerized environment or in accounting softwares such as Xero, some of the recording of the transaction occurs when you use the features or the modules in the software. So for instance, if you raise an invoice, accounting entries are going to be entered for you. If you raise a bill, accounting entries are going to be entered. If you use, let's say, the fixed assets module, the entries are going to be entered.
Okay.
So most of the entries will occur once you use the feature in the software. So the journals are then used for some limited purposes or limited transactions. Let me put it that way.
Okay.
So for example, you will then use the journal maybe for accruals, for your payroll accounting,
Okay.
and sometimes maybe to correct errors or for prepayment amortization. So you use the journal for some few transactions which you need to complete in order to have a whole accounting done
like
for
mostly
the month.
like month-end closing
Yes.
activities.
Yes.
Okay.
Yes. So these are the uses of journals now in the computerized accounting environment.
Okay. So I think, Ellen, you've done justice to the points there, and thank you for taking us through the chart of accounts, the financial performance, the journals, and all. Now, I'm sure you are ready to walk us through some of the demonstrations that comes with what you have walked us through so far. But before then, let me just announce to our audience that if you have any question, please put them in the Q&A box below your screen, And then we will attend to those questions. And also, I want to also inform you that on the 20th of this month, August, we'll be hosting another webinar that will highlight on navigating, under the topic navigating VAT tax audit. It's going to be an interesting one. So as you are sign on to this one, I would encourage you to also sign on to that one on the 20th, and we'll have a very good discussion on tax audit. So Ellen, I can see you are ready with your demonstration. Yes. So can you walk us through?
Okay, so I'll now walk you through a practical demonstration of the accounting entries. So we'll start with the spend money and then the receive money transactions. I think I've indicated the purpose for using a spend and then receive money. So in Xero, you will enter these kind of transactions in a specific bank account. So you would have your bank account always displayed on the dashboard. In my demo organization, you can see I have two bank accounts, business and then the business bank account and then the business savings account. So we are going to enter our transactions in the business bank account. You will first click on the three dots. So click on the three dots and then under the new tab, create a new spend money or receive money transaction. So we will do a spend money transaction for now. Let's click on spend money. Okay, so we would enter a transaction for the payment of PAYE. So we would, it's to GRA, the Ghana Revenue Authority. Our reference, let's say this, we have PAYE for July 2020. My quantity is 1. My price, unit price is, let's say 500, and then the account is the PAYE payable account or the income tax payable, which is a liability account. So you have to review all this information and then attach any document that you need to attach before you approve your transaction. So before I approve, let's just check the balance on the business bank account. So the business bank account has a cash book balance of 1760.54 and then a statement balance of 8315.64. So the balance in Xero is the cash book balance and then the statement balance is the 8315. So let me just go back and enter my transaction again. We want to see how the cash book will be credited or debited. So Ghana Revenue Authority, PAYE, July 2020. The amount is 500, is the income tax payable account. My reference CH0001. And then I'm going to save my transaction. So there are two ways to know whether the cash book has been debited or credited. The first procedure is to check the balance in Xero, so you can reload it and then see whether the transaction, if it's a spend money, the balance in Xero will reduce. If it's a receive money, the balance in Xero would increase. Another way is also to go into the accounts transaction tab. So I have my transaction saved now. Okay. Let's reload this page. We have 1760, so reload it. And then now you have 1260.54. So for spend money transactions, the cash book is what's credited. And then the account that you select is going to be debited. Again, you can go to the accounting tab, account transaction, select those two accounts, and then you'll see the accounting entries in there. So I'm going to select my business bank account and then my income tax payable account. Update. And then you can see the entries in here. So we have Ghana Revenue Authority. The cash book has been credited with 500. And then we have the income tax payable account debited with 500. So these are the entries behind the spend money. The opposite is for receive money. So if you want to see the accounting entry, simply go to the accounting transactions. Let's move on to a bill or an invoice. A bill and then an invoice. So we'll start with the bills. And then for the bill, we'll convert a PO into a bill. And then for an invoice, we'll convert a quotation into an invoice. So under business tab, you go to purchase orders.
So I think you mentioned that the PO doesn't have any accounting entries, right? So now we want to make it have an accounting entry. So we'll convert it to a bill.
Yes.
Okay.
So we're going to use our ABC Furniture PO. So we assume that the service has been rendered or the goods have been received, and then you've also received the bill as well. So we are going to convert the purchase order into a bill. So you can mark it as billed and then copy the PO into a draft bill. So you have all the details from the PO populated in here. A bill will always have a due date. Without the due date, the system cannot process it. So check the due date that the supplier gave on the bill. So I would say, assume that it's a plus 15 days. And then you need to indicate the account. You need to indicate the account. If it's an inventory item, there's a setup which is also done in the system. So normally the inventory account is already linked to the inventory item. But then if it's not an inventory item, then you have to select the account here. So I'll select my purchase account. I want to expenses, so I'll select my purchase account. And then I'll select my VAT rates. Review every details that I have here. Once it's okay, then I approve my bill. Okay, so the due date is empty. As I said, you cannot save it even without a due date. So let's enter due date and then approve again. Okay, so we have our bill approved. Well, you don't see any accounting entries on the face of this bill, but then I can assure you that accounting entries have been done or it has been entered in the system. So if you want to see the entries, go again to the accounting tab, account transactions, and then you would select the accounts payable and then the purchase account. So you must have an idea of which account to be debited, which account to be credited.
Yes, I think that is very important.
Very important.
Because if you don't understand which account needs to be debited and which one needs to be credited, most likely, even if things go wrong, you will not be able to spot them.
Yes.
So I was also wondering, I was going to ask you about this, but I think you are going into details on that one.
Yes, so your accounting knowledge is very important as well. The software will not always do everything automatically. Okay. So we'll select the accounts payable and then our purchases account and then update to see the entries. Okay, so let's scroll down. The entry that we had was the ABC Furniture 711, and you can see the accounts payable account has been credited with the full amount, which is the 1063.13. And then our purchase account has been debited with the amount exclusive of the VAT and then the levies. So I should have selected the levies account. So I'm just going to do that and select the VAT account for you to see the entries there also. So update. Okay. So you can see ABC Furniture payable invoice 711. This is the VAT and then the levies amount. And as I stated, for bills, you need to make sure that only the VAT amount is left in the VAT account or the sales tax account, because levies cannot be claimed. They cannot be claimed as input VAT. So there's no need to have it in here. So you'd have to pass a journal to move it out of the sales tax account.
Okay.
So these are the accounting entries behind a bill which has been approved in Xero. We would also look at sales. Again, for sales, we will convert a quote into an invoice. So on the business tab, let's go to quotations. So we have a quotation already in the system which has been sent. So which is the Ridgeway University quotation. We are going to use that for our example this morning. I would want to mark this quotation as accepted after my potential customer has accepted it. And then once I've rendered the service or supplied the goods, I create an invoice. So mark as invoice, create. The details are also populated again from the quotation. So enter the due date, very important for managing your cash flow as well. So 15 days for our customers to pay us. Review all the details. If you are okay, approve the invoice, and then you can send it from the system automatically to the customer as well. Okay. So the invoice has been approved. Do we see the accounting entries on the face of it? No. So again, go back to the accounting tab, account transaction, can open it in a new tab. Select the accounts receivable, the sales accounts, which is the account which was on the invoice, and then the sales tax account. Update again to see the accounting entries.
Okay, so all the time there's something happening behind the scene that we don't see.
Yes.
So on the surface, something will appear,
yes.
but you need to know that something is going on behind the scene. Okay.
Yes, exactly. So you can see the Ridge invoice, the full amount, the accounts receivable account has been debited with the full amount, which is 5315.63. Let's just look at the invoice. So 5315.63. And then the amount exclusive of the VAT and the levies is the 4,500. You can simply verify from the invoice, 4,500. And then we have the sales tax or the VAT account, which is housing both our levies and then output VAT, which is 815.63. So you can cross-check again. When you sum the VAT and then the levies, they add up to 815.63. So you can see how the accounting entries have been done for you without you even knowing that something has been entered or gone on behind the scenes. So finally, we'll look at the accounting entries for journal. We look at the accounting entries for journals. To access the journals, we have two options. Journals in Xero is known as manual journals, as I said. So you can use the quick launch plus button here to access the manual journal. So you can click on it and then manual journals, or you go through the accounting tab, report section, and then manual journals. It's also another way of accessing the manual journals. I will use the quick launch manual journal. And then I'm going to use my journal to account for my payroll, expense, and then liabilities. I'm going to use it to account for my payroll, expense, and then liabilities. You might use your journal for accruals or for amortization. So it depends on what you have to use the journal for. I will use mine for journals, for payroll journal. So I'll say payroll journal for, let's say, July 2020. You can create repeating journals. You can create just a one-off journal. So I will use 31st July because I'm accounting for my payroll, expense, and liability for July. If you want this same narration in the description, then you can check the default narration here. Other than that, you can decheck them and then enter your details. So I would enter my basic salary. I am entering my journal on an aggregate terms for all the employees. So my wages and salaries, the total expense is, let's say, 5,000. Employer SSF, which is also an expense, is the employer's contribution towards SNIT. So that's also an expense. So these two accounts are all expense accounts. So that is, let's say, 200. My PAYE payable will be a liability. So I'll select my income tax payable account. The amount is, let's say, 2,000. Journals must always balance. So you can see the system is even trying to balance it automatically for me. So make sure your journals always balance. PAYE is 2,000. Net salary, I'll select my net salary account or my net payable account. And let's assume that is also 3,000. I'm left with 200, which will be my SSF. So SSF payable. So let me have my SSF payable account here, 200. So review, and if you have any supporting evidence to add to it, just attach your file. And then you can save it as drafts or post it. If it's an accrual journal, you would want to set an auto-reversing date so that on that particular date, that accrual will reverse automatically in the system without you having to do anything. So I am okay with my journal. I don't want to save it as drafts. Also, depending on your level in the organization, sometimes you might not be allowed to post journals directly. So you have to save it as drafts. If you are posting it, the accounting entries are going to be entered and it's going to affect your financial statements, your financial performance, and all the other reports. So I'll review and then I'll post. If you want to see the accounting entries, go to the accounting tab again, account transactions. Now you can select all the accounts, employer SSF, wages and salaries, net pay, SSF, and then net income tax. So my journal date was July. I'll change my period to July. And there you have it. You can see all the accounting entries and how they have affected all the accounts that you selected. So you can see employer SSF has been debited 200, income tax payable credited 2,000, net pay credited 3,000, SSF credited 200, and the wages and salaries expense account debited 5,000. Okay, so dear participants, in summary, we learned about the objectives of the financial statement. We learned the definition of an asset, liability, equity, revenue, or expense. We also looked at the chart of accounts. We looked at the accounting entries for spend, receive money, bills, invoices, quotations. We also looked at VAT and then the levies accounting. Finally, what journals are, manual journals in Xero, and what they can be used for. So thanks for your audience and for making time with us.
Okay, Ellen, thank you very much for take some water, and then before we go to our audience to take questions. But I think it's been an insightful one. You know, most of the time what we see on the face of all the softwares are the entries that have, just come out ready-made, let me put it that way. But you need to understand the real accounting behind those entries as an accountant, so that you are able to tell when things are not going well. Like in the case of the journal, for instance, if you are passing journal and it's not balancing, I mean, you should be able to understand or know where to start, looking for the problems.
Yes.
From. So it's very important. So thank you for that. Now, let me check our Q&A if we have questions to attend to. Please, you can keep your questions coming in. Now it's time for us to attend to questions. So we have about some 10 minutes to do that. So you can keep your questions coming. And as I said earlier, on the 20th of August, we'll be hosting another webinar on the topic navigating VAT tax audits. And this is going to be an interesting one. But Ellen, before we come to the questions, somebody has asked, he said VAT is VAT automatic set in the system, or you need to set it up?
You need to set it up. So I have set mine up. That's how come you could see I easily selected them. But you need to set it up. So if you're having challenges setting up the VAT in the system, you need to contact the support for the software.
Okay.
And then you can be assisted. So we can assist to set up VAT in Xero for anyone who is having challenges.
Okay. I think you touched on the use of the journal and the manual journal for that matter, but can you, just reiterate when to use the manual journal?
Okay, so for manual journals, so it's called manual journals in Xero. Okay. So for journals in any accounting software, it's used for limited purposes. As I stated, some of the accounting transactions would occur when you use some of the features in the system. So when you raise the bill, the accounting entry is going on there. If it's an invoice, the accounting entries. When it's a spend money, the accounting entries. So some of the work will be done by the features. And then some, you now have to use the journal to complete them. So unlike in those days where you have to use a journal, to do almost everything for the accounting right from the scratch. Now it doesn't really work like that in a computer environment.
Okay, great. Let me attend to this question from Theophilus Sapo. Theophilus Sapo. He said, please, can we have a playback of this training? Yes, Theophilus, you have a playback of this training. We would post it on our YouTube channel. And so you can visit our website and then get through to our YouTube channel, www.scg.com.gh. And then it will be uploaded there for you to have access. Okay, from an anonymous person, he said, is there any advantage in using the quick launch journal, the quick launch button of the journal? Is there any advantage in using that?
Oh yes, it's quick launch, so you get there faster rather than going through the other process. So the other process, you have to go through the reports, the accounting tab. So let's say accounting, reports, then you now go and look for the journal. So you scroll down again and now go and look for journal. So you come and click on journal here and it will take you there. So it's a long, this is a long process, whereas the other one is a very simple and easy process.
Okay, so the quick one actually reduces your stress of going around this
round, yes.
Okay.
And it's not just for the journal, any other transaction that you have to, like a bill, quotation, PO, spend money, you can see them on my screen. You can easily access any of those features quickly using the quick launch button.
Okay, so that's how easy the use of Xero can be.
Very easy.
Okay, so another question from another anonymous person. I don't know why you don't want to use your name, but that's okay. It said, can Xero be practiced at home or must you purchase it? This is an interesting one.
So you have 30 days trial period to use Xero and then to practice Xero. After that, you'd have to purchase it. So we have other training also on our YouTube where we discuss into details how to access Xero. So you can also have a look at that as well.
Very well. I think those you would have a lot of resources to understand some of these things when you visit our website, because we have some blogs addressing some of these issues.
Exactly.
And then some of this training too have been held already in the past, and this is just a build up on those ones. So Kwame Boafo, he wants to know. Okay, let me read it. He said, can you please post the link of the playback on your LinkedIn profiles as well, please, so we can reshare? Definitely, Kwame. We would post it once we upload it on our channel. We would post it on our LinkedIn profile as well as our Facebook and Twitter handles. We'll post it everywhere so that you can have access to them. Yeah. Wow, the questions keep coming. Okay, Ellen, let me read out this one if you can address that one from Isaac Charles Aqua. He said, you passed a journal for payroll, but Xero has a payroll functionality. Does not work in our region. I'm sure it's what does it not work in our region, especially with respect to our PAYE computation. Can you explain that?
Yes, I passed the journal because it doesn't work in our region, especially in relation to the PAYE computation. So if it does, there will be no need to use a journal. So all you'd have to do will have to use the payroll feature in Xero and then use it to run the payroll. And when you do that also, it means the all the accounting entries that I just did using the payroll journal will all be done behind the use of that feature.
Okay.
Yes, so that's the reason why I passed the journal. I hope I answered you.
I think so. So in essence, what it means is that even though Xero has a payroll feature now, but it's not active
For our region.
For our region.
Yes.
Okay.
So it is active in other regions.
In other regions. Okay. I hope, Isaac, you got that correct. And you said well noted. Thank you. So I think we have just about 5 minutes to go. So if there are no more questions, but okay, let me just wait a minute. I can see somebody typing. All right, so as I indicated, if you are interested in using Xero for your business, and even if you need further training on the use of Xero, you can always contact us for help at info@scg.com.gh or visit our website www.scg.com.gh. We have quite a number of resources there that you can learn a lot and keep the discussion going as well. So you can visit any of our channels as I have indicated. Again, I wish to remind you that on the 20th, again, there's going to be another webinar. And subsequently, we would keep engaging you as we have done in the past months to, explore the features, the beautiful features of Xero, so that you can maximize it if you are a user. And if you want to even learn it, you can still, find it interesting to learn. We will also be sharing with you, after the session feedback form, and we would kindly request you to take just about, it's less than 3 minutes. You'll be done with it so that you give us a feedback to know how we are faring and what we can do to improve the content of our webinars in our subsequent webinars. So we would really, really appreciate your feedback on those forms. So Ellen, I think there are no more questions from our audience. So we appreciate your in-depth, explanation and walking us through the Xero, the accounting behind Xero. I think this is a very important one. I wish we had a part 2 of this, and so that we can explore some more. So for you, audience, thank you for attending this webinar. And we really appreciate your time spent here. We know that it's not worthless. It's worth spending the time here. We have learned a lot, and we keep expecting you to sign on to our subsequent webinars, where we'll be engaging you on several issues of business. So thank you very much for making time to join us. And as I indicated earlier, you can visit our website, www.scg.com.gh, or send us email at info@scg.com.gh, and we would always be glad to attend to your queries. So thank you very much for joining us today, and see you at our next webinar. Have a great day. Bye-bye.
Bye-bye.